What's going on, everybody? Good evening, good afternoon, good morning, I think, to some of our friends in the Asia Pacific area. I hope everyone has had a wonderful, safe, fun weekend. I hope everybody in kind of the Southeast and I guess drifting into kind of the Appalachian area, that everyone is safe, everyone is dry. And if there was any issues, if you had any damage or anything from the hurricane, that you're staying safe. You're keeping busy, you're focusing on what's important and hopefully not markets. So if you were affected by the hurricane, I'm very sorry. I hope, you guys can clean up, can figure everything out and, get back to some normalcy really, really soon. So, prayers for everyone that was affected by that. I know that's not an easy journey. We deal with it a lot, not as much me, North Texas, but definitely anybody around the Gulf area knows how terrible and, horrible those things can kind of be. So hope everyone is staying safe. And is going to get some normalcy here and hopefully some dry weather to, kind of dig yourself out of some of those flooded areas and other things that have kind of happened in the last few days. So, hope everyone is okay and dealing with it as best they can. So, all right. So how was everyone's trading week last week? I know it was not necessarily the most fun week in the history of trading weeks, especially given the seasonality volatility that we may sometimes get. And I guess quick audio video check. Everyone can hear me. I'm not just rambling to myself. It seems like everything's good. Andrew's got me that we're all good, it looks like. So yeah. I think if you guys were watching last Sunday, we had talked a little bit about, me being optimistic for some volatility, for some fun, for some good trading opportunities. And, there may have been one or two last week, but, nothing that really jumped off the page of something that I was really eager to jump in and trade and, really get a ton of points out of it. It kind of was, you were scraping the bottom of the barrel. It felt like at times with some of these like not even slow grind type of days, but it's like we had downside on Friday, but it just didn't necessarily feel like it. It felt like a holiday for half the week, I guess is probably the best way I could describe it. If you were looking at ES, especially, it just, wasn't necessarily the best product to trade. And then I kind of take a step back and look at like something like the Dow. And I'm just like, well, once again, why am I sitting here trying to trade NQ and ES when, YM is moving so clean? So one of those weird days, I guess weird weeks. Hopefully this week is a little bit better. I think everyone's starting to trickle in here to the show. If you're new, if you've never tuned in, I'm Nick4ATick, also known by Nick, on the TopstepTV weekly crew here, the gaggle of random, Topstep traders that we have on now. I'm a Topstep funded trader, trading a live account, trading XFAs on the top 10 leaderboard. If you've never watched my show before, this is not a trading hour, I guess is usually what I like to get out of the way. If you're looking for, some high volatility, high action type Globex open 5 p.m. Central type trades, you ain't going to find it here. This is designed to help you guys prepare for the week, help you guys have an understanding of, what is somebody that is trading on Topstep doing to kind of formulate an opinion for how they're going to attack their week. We talk about news, we talk about data releases, we look at earnings when there are some. We won't really talk about any today. We look at some options data, just different things that you can arm yourself with to be a more successful trader during the week, or when we interact with certain, parts or certain price areas, how could you potentially look at taking a trade or maybe not taking a trade? Because, there's a lot of areas in the auction that just don't make any sense to potentially enter into a trade. It could be a great area for you to cover if you were in one, but it doesn't necessarily mean that there's always going to be the best trading location at that spot. So we'll talk about that. We'll talk about volume profile. As always, if you're watching, if you have questions, whether it's something I'm going over or just something overall about me, about Topstep, about just trading in general, I can always do my best to give my perspective on your questions. So as we're going through things here this evening, please throw them into the chat. We will do our best to kind of compile them all and get to them either, as I'm walking through things, if it's something that I think is relevant or will, make sense to kind of cover at that given time because it's something I'm talking about, happy to answer it. If not, we'll save majority of them towards the end. And I always will love to continue to, get questions answered and help anybody that is having difficulty, having trouble, or struggling in their trading journey too. So, the full gambit's kind of open of, things that you guys can ask me or get my perspective on. I'm happy to do it. So yeah, let's dive in and talk a little bit about last week. So we are on ES and I'm on the Z contract. Rollover is dead and gone. We don't have to talk about it. Don't have to worry about it until, sometime in March. So, I guess hats off to that because I absolutely hate rollover, but the contract rollover is done. We're on Z contract and we can now kind of just, focus on these price levels, not have to kind of revert back to, old price levels that may make sense, in context versus trading these new ones. So looking at the volume profile from last week, as I said earlier, if you've never tuned into my show, one of the things that I use to help me be successful is having an idea of, what did the volume look like for various weeks that we are trading in. So I usually like to look at a good 1 week rolling like this. So this is a multi-week, 1 week time frame. So 5 trading days, including Globex on Sundays. The volume structure for that given week. It just helps you get an idea of, where we are trading in terms of volume by price, if that makes any sense. That's what volume profile really is. And it gives you that histogram perspective of, where was majority of the volume traded at in that given week. So looking at last week's profile, it's pretty balanced. Nothing jumped off the page. We had kind of, I guess I made the joke that this was a pretty boring week, and it really was. I would say outside of whatever, I guess that's really what it was. It was China kind of hinting at them doing quantitative easing and stimulating their economy. And you kind of had this crazy bullish move out of the Asia Open on Thursday that I'm sure just frustrated anybody that has used, market generated information type levels, or maybe you were looking to take a short somewhere at the previous day high, like at 98, and you probably got absolutely blown out in the overnight if you were somebody that likes to set limit orders and just kind of wake up and hope that, price is respected as far as basic levels from the previous day, the previous week. It doesn't necessarily work when, you have that type of bullish move overnight where looking at these 1 hour candles, it just was completely up and to the right on the 1 hour structure. Then we had some consolidation, on, I guess, was that Wednesday night? I think it was. Maybe it was Thursday. What day is that? The 25th. Yeah, I guess that was Thursday evening into Friday. And then we had that sell. No, that was Wednesday evening. I'm an idiot. Someone correct me if I'm wrong there, but I'm 99% sure now that was Wednesday. And then that was Thursday. And then, we had this consolidation and chop into Friday. So yeah. Basically what we had was a pretty balanced distribution. You have the point of control here near the kind of the lower end of last week's range. But when I'm looking at this is pretty balanced, guys. There's nothing that you can really look at here and be like, having a great, point of entry or even a perspective of where we might go this week. We're still trading at all-time highs on the longer time frame. ES is in, I would say a bullish 4 hour structure where if I was to probably draw a trend line from the August lows, that's a pretty decent, 4 hour time frame type move upwards. And each week outside of, I guess for the last 3 weeks, we've been just kind of, time framing on the 1 week time frame, a move up every time. And we come down, we retest like a previous value area high a lot of the time, or, kind of the top end of the previous week's distribution. And then we make a move out of it. So the same could be true. We could come back down, retest, what is this? 57.70s, 57.75, 57.80s, maybe even a little lower down here towards the lows of last week. That's one of the reasons why, if I'm looking at this just first pass here, if I was going to set a pivot for ES, it's probably going to be somewhere between 70 and 60, just as an area that I'd be looking for, buyers to kind of step in and defend that 70s area is most likely just being, the volume that was traded there. And even looking at the longer time frame, this high volume edge here around 72, 73, definitely could be an area where buyers are still present. And if we're going to do a similar move in this structure where, everything is good, the market loves the rate cuts, and we're going to continue to make moves higher, it's not outlandish to think we're going to come down, maybe consolidate around that 70s, those 60, that kind of breakout from last week area before we make a trip higher. So if we were to even go retest the highs and come back, that's where maybe I'd be looking to kind of get long and, go make a new all-time high, hit an air horn that we all love to do. Now the bearish perspective of that is if you're losing 70s, and we kind of go back, well, where will we go? The first place you may find buyers is going to be back towards last week's pivot. If you guys remember where I set mine was between the kind of the 40s and the 30s. I think I even settled and put it even lower at the 20s, and we got nowhere close to even testing it. But I think that may still be true here, where if we were to lose, kind of the lows of last week, it's a reasonable assumption that we may find buyers, down here in the 30s. And if we were to lose that, or we got a pretty decent sell into the early parts of this week, you may find passive rebid down here around 57.10, 57.15s, and then all the way back to, the elephant in the room from last week, which would be the big round number, 5,700, where if we were to really zoom out, you have this huge high volume edge here. There's a much larger time frame point of control. So if you kind of lost last week's range and we were to get a more outside move to the downside, that's probably, the path of least resistance, where it probably would maybe cap the weakness for the week is most likely going to be down there. I still weirdly think we're kind of in an option pinned type of market. And we'll talk about that a little bit, at least to the upside, that some of the celebration may need to be capped. We may be kind of just going to be balancing in a range here until the market may get new information. We may slow grind and kind of make sad all-time highs, I guess is the way I could describe it, like we've kind of been doing, where it's just like, oh, woohoo, we made it in the overnight, air horns, and then we kind of drift back in distribution, just like it was here. We made it, and then it just kind of sad and comes down. We don't just get a, almost blow off top type move. We just haven't been getting it lately. But if we're going to repeat the pattern that we kind of had in August, where we just kind of kept, or not August, July, and you just kept making all-time highs every day for, 2 weeks straight, basically, you can't, I guess, overrule that we're, not going to repeat that type of pattern. But I always like to prepare you guys for, both sides of that coin, because if you're losing 70 here, your new balance range very easily could be between this point of control here at 75s or 73s, I guess, whatever it is, called 74s, down towards this one from the previous week below 5,700. And it's very possible we could just kind of chop and balance in this range here, which would be, to nobody's surprise, probably my least favorite outcome that could occur this week. But it's definitely in the realm of possibilities, where if you got a bearish move down, we find buyers, we may just chop and consolidate and wedge until the market makes a decision between this high volume edge and this high volume edge. We've seen stranger things happen before. So that's kind of the read on ES. I definitely love kind of the 70s, the 60s as my pivot for the week, bullish, looking for buys above, sells below. And if I'm selling this, I'm probably looking, like I said, for that rotation down to the 40s, maybe go to runners there if I was in a longer ES short, and then, kind of that full move down to that 710 area realistically, because like I said, we might find buyers there, and I probably don't want to get chopped up and, only for a few more points to get a little lower down to 5,700. So that might be my trade to start this week, or maybe tomorrow if we get that little bit of weakness. But if you get a passive rebid off there, I'm sure Dakota, if we are down there tomorrow morning on fast markets, is going to be looking to buy this with me, whether it be on NQ or ES, if we can get some consolidation and see some, typical passive week flows. But something else to keep in mind to everybody, it's the end of the month. you have rebalancing, you have weird things that tend to happen. And then, coming in the early parts of this week into like October 1st, you get all of our 401ks, let's say buying tomorrow or buying the following day on October 1st or the last day of the month in September. So you may have some crazy moves to the upside when we all get to buy at the all-time highs in our 401ks. I always hate trading the last day of the month and the first day of the month for, just because you can get pushed around by passive flows. So just keep that in mind. Everybody's and their mother's 401ks and pensions, everything tends to buy on those days. You just get a larger allocation of inflows from that type of move, and funds just buy, and wherever we're trading at is kind of where that price point is. We saw this at the end of August. If you guys remember, we had a crazy end of the month move that was super violent to the upside into kind of MOC and things like that. So just something to keep in mind here if you're going to be trading into the closes the next few days, or even trying to trade the opens. Just know there's some passive flows probably coming in. But we are open here to start the week. Pretty much opening right around settlement. Actually, I believe a little bit above. I think we closed around 85s. Somebody can correct me if I'm wrong. So let's jump over to the NASDAQ. Yes, and everybody in the chat, I'm going to go over the big four. So ES, just wanted to make sure we have a more defined plan, because as you guys know, I trade, I typically use ES to guide my decision-making on NQ a lot of the time. Obviously, they trade usually in correlation, but sometimes I think we saw in parts of last week, it's not always the case, and you see a little bit of divergence at times. So as always, I like to just do majority of my prep on ES and then kind of translate that shortly to NQ levels. So NASDAQ here, same thing, opening a little bit higher off the, the settlement price around 200s. Looking at the distribution from last week, similar pattern that we saw in ES, pretty decent wide distribution, but it's pretty balanced just because of all of that volume that kind of occurred with us making the highs from Thursdays overnight, and then the sell down, and then consolidation from there. So once again, pretty balanced distribution, but we did almost a similar move that we saw in ES, where you kind of made that high from the previous week. You came back, you consolidated, you had a sell to start the week. We retested kind of the previous week's value area high, and then kind of made a move off of that. So just the bare minimum, guys, if you're still trying to understand volume profile, if you're still trying to understand ways that you can kind of have predefined levels or areas that you'd be looking to enter trades, using value area highs, value area lows from the previous week, points of control. That's where you can, like I said, not necessarily be looking oh, okay, I'm gonna long every retest of a value area high. It's more like it just gives you something to use as a level of confluence that you can decide, okay, when price gets there, what is the right type of trade? Are we in a full downtrend? If we were to make this move now, let's say an NQ going into tomorrow from the overnight and everything else, if we have a pretty solid down move, maybe a passive consolidation, rebid off, this value area low from last week. If you kind of were to sit there and watch and wait, if you lose it, I'd say you want to jump in short. So I don't use these levels or give out levels like that to say okay, yeah, you should be looking to long off this. It's more, these are areas of interest, and you should be observing what price action tells you when the market interacts with that specific area. On NQ, that area can be 30 points at a time. So if we made the assumption of this, high volume edge here being a pivot for the week or something, or maybe a little higher in the hundreds, but if this being a high volume edge here from last week, as well as on the longer time frame, it's one of those where, okay, what does price do when we get there? Does it consolidate? Do we see sellers kind of step on the gas? Do we see a ton of stops get blown out? And then we kind of passively come back into, the previous week's value area, kind of like you saw here, or you saw a very large, wiki type candle. And then once it came back, you probably had a pretty safe long there. So that's typically what I'm saying, using value area highs, value area lows. That's how you can kind of use them to, like I said, not establish I'm going to long off this, but just an area of interest to observe price action and then make the best decision possible with your trading style of Does it make sense to long there? Should I be shorting there? Should I be completely hands off in some of those areas? So looking at NQ here, as we said, just like with ES, you're kind of in the middle of the distribution from the previous week. And we're at kind of right back to the highs of the previous, 2 weeks ago, I guess, where I was saying if we can get some bullish continuation kind of above, these 100s, this 20, basically just as long as we can keep holding above and balancing above 20,000, I do think you may get bullish continuation up to, I think last week when we zoomed out, I think I got to get the 4 hour, but we had talked about this area specifically on NQ where, if you guys remember the distribution from last week, or when I looked at this last week, there was no volume really in between like the 600s and the 400s. And I had kind of said, if we can, hold above that kind of, 400 area, it's very possible that we'd go and maybe retest 600. And I think I even made the outlandish claim, if we got a big move to the upside, 20,800 all the way to 21,000 was not, out of the realm if we were really going to get a move. But we just didn't seem to have the enthusiasm, the volume, and we're once again kind of just back into balance. So the same thing is true here. If we can kind of get to the higher end of last week's range, these, whatever I would say, the 200s even, if we continue to see, us holding this level, this longer time frame value area high, basically, and even last week's point of control, when I'm looking at the volume profile, if we can continue to build volume above that, it makes sense that we would continue to go retest, some and fill in some of that volume that we saw in the longer time frame, to potentially go make a run on NQ, making all-time highs in the longer time frame. If you get weakness, it gets a little weird once again, where if you kind of lose 20,000, it gets a little spooky, and we probably are going to, potentially come back down, potentially much lower. I'm still very much, bullish, I would say, on the NASDAQ if we can kind of hold 20,000, but that's where I'm kind of putting my pivot. It's going to be probably a little higher around, 20,100s, maybe even a little, actually, maybe even a little lower. I don't know. I got to think about it a little bit more, but just given that we are basically balancing in the previous week's range and right in the dead center, right at the point of control, just like we are in ES, it makes sense to potentially be a little hands off in the first part of the week, see what the market wants to do. I think, on the upside, like we said, it would make sense to potentially go retest these highs and maybe go make that run for 20,600. That's kind of my bullish case for this week. I would not be shocked if we go do that. Like I said, on the bear side, we're probably going to come back towards, 19,600, maybe even retest the previous week's lows. But I would expect meaningful buyers to defend some of this, and, potentially your first rebid spot of the week, if you get some initial weakness, is going to be around 19,900s. This, low volume edge right here on the longer time frame, and basically would be the lows of last week. It actually would be a kind of go take out the previous week low and then maybe come back into range is probably your long. So if you were to kind of go break 19,050s, maybe go flush towards 19,900s, and we come back a little bit, I'm probably jumping on that train, at least the first attempt. But everything just depends on, what does the price action tell us when these things are going on? Like I had said this earlier, but I'm not the first person to just say, oh, I have a level defined on my chart and, it's support and resistance. So the first chance it gets to touch it, I'm going to long it at support. No, I usually am waiting, kind of seeing what the market is telling us when we interact with those levels. So yeah, guys, same thing on NQ. If you were to, zoom out from, the August lows, especially, you had, kind of us going to retest this area that we're in right now. We failed, we came back, and we've been rebidding ever since. Just like ES, 3 weeks straight of kind of time frame, a 1 week time frame moving higher. Even from last week, we just continued to kind of move down, retest certain areas, and then make a room move higher. So like I said, that's kind of why it also makes sense to put my pivot a little lower towards the the lows of last week, this value area high from the previous week. So 20,000 basically down to 19,900, I think is a very solid like rebid possibility type area where we could definitely find a cheap entry long if you get any sort of weakness to start this week. So I'm not looking to, get chopped up, around this area, this 200s, this, I would say even like, what is this, 108s, 110s. I'd much rather rebid there than get chopped up where we're trading right now on the NASDAQ. Let's do GC first. So everyone's new favorite toy, for some reason, I think historically it's been kind of boring to trade, but it's moving, I guess, just like the YM has been moving. So it can definitely be a solid instrument to be trading intraday. And when everything is, just kind of time frame moving higher like this and making new all-time highs repeatedly, it's pretty easy just to kind of close your eyes and buy it at times, especially when, it's been consolidating, maybe retesting a low of the previous week and then breaking out higher. If you guys remember from last week, I had said I'm pretty bullish gold. I would not be shocked if we go make 2,700 this week. Well, there we go. I don't trade it. I kind of wish I did, but at the same time, I probably wasn't going to be the first person to long the all-time high for a trip to 2,700. I kind of wish I took once we broke out, I guess, above 2,500, that I took a micro swing in my personal futures account that I could just hold overnight and, just kind of let it ride. Cause I am pretty bullish gold still. And I think, if with election season and the R word still randomly thrown around at times, and who knows what's going to come next in this cutting cycle with the Fed, I would still rather probably be long gold than short gold. So the same thing is true here. We're still trading at all-time highs. We're about, 20 points off of it as far as the open right now. So, like I said, I'm bullish gold. I wouldn't be surprised if you get, some aspect of a relief sell at some point, but I think it's going to be bought. So even if you got weakness down towards the lows of last week into consolidation in the 50s, maybe your first safe long is there. And then I definitely would assume you're going to find a ton of buyers at 2,600 if you were to get that. Let's say we had a week of consolidation and a move back down to kind of retest this. That's probably the most logical place. And I'm not saying this is what I think is going to happen, but if it does finally get a little bit of relief, or you get some passive selling on like the 1 week time frame, and we get a move down, I have a strong probability that you're going to find a ton of buyers and people interested to hold that level and interact and move us higher again. So the same rule applies here, guys. If you were to look for where I might buy gold now, it's gonna have to be a little lower in the 60s, maybe this low volume edge, like kind of the lows of Friday, maybe, like I said, 2650s. And, on the most bearish case, maybe you took a stab near the lows of last week. But if it were to lose, in my opinion, if it loses kind of the mid 40s, I'm hands off. I guess this consolidation area here was at 48s. Yeah, I would say you're better off if it loses 50s personally, to kind of just let it do its thing before I step in and want to buy it. I'd be looking to, like I said, maybe we get a retrace a little lower in the 30s and the 20s, that I could maybe find a passive rebid there from the previous weeks. High volume node up here. You had this kind of wick move up here, and you've had a few other consolidation areas there around the 20s. So that might be a safer buy if you got some strong weakness in GC. But the logic is here with planning for this, guys, there's no way I want to step in front of this and short it on any time frame right now. It's just everyone is getting long gold, and like I said, I have a bullish case and think that in the the early parts of next year, I wouldn't be shocked if we're at 3,000. So you heard it here first, but I would not be surprised if you got that type of move up on, a few months out time frame. I would not be shocked given how bullish it's been, and given, it still being kind of the safest asset for a lot of people with, everything else that's going on in the world. So I'm looking for ways to buy it if I'm going to trade gold. I'm not necessarily outside of intraday scalps short. You want to do that? Sure, go for it. If you see weakness, if you want to get behind strength on a sell move down, but know where to cover. And you can know where to cover by looking at, points of control, high volume edges, low volume nodes, where you might find that, meaningful buyers again. That's the concept we've constantly been talking about on the show, week after week is, okay, if you got weakness or you got to move higher, where do I think you might find passive sellers again? Where do I think you might find meaningful buyers again? The same is true. So if you are holding or looking to short or get short GC at any point this week, you got to know where your exit is. And back to my least favorite instrument to talk about and trade because of whatever the heck has been going on with Crude. So let's talk about this. I think we had a couple of weeks ago, we were talking about maybe, finally hitting a bottom in the kind of mid 60s, that 65 area. I think I said I was not interested in being the first hero to try to long this out of the 66s. I think it was maybe last Sunday I was saying I wasn't ready to be a hero and try to buy this, 2 weeks ago. The same is true now. I still am trying to be the first person to jump on and long Crude right now. It's just, same thing. On a longer time frame, guys, we're still moving down. If I were to jump to like a 4 hour, we're still moving down. So that makes me a little concerned. And given that we went and retested 72 last week and then got absolutely walloped in the face back down into the kind of the high 60s, it's still, that kind of choppy, crazy mess where every week it just seems like it's if you think you're getting a breakout or you have a swing long or swing short, it just punches you in the face. So do I think you have a pretty safe, passive buy opportunity here? Yes. You have a couple weeks of consolidation. You have a low volume node here at 68. So definitely if you were to, try to passively get long around the last couple of weeks of point of controls here, this kind of consolidation at 67.50s. If you wanted to stab long in this area, there's nothing wrong with it. I just have no interest in kind of being whipsawed, week after week in CL. But if you got it, it's a reasonable assumption that we could once again go retest 71s. If we break up above that, 72.50s, the highs of last week, and maybe you finally pull us out, maybe break this downtrend that we've been in. But I mean, if I was to, I know we have contract roll and I back adjust my charts, but if you were to kind of draw once again that 4 hour trend line, probably you would likely need CL over 72 to kind of stop the bleeding here on the longer time frame. And until you do, it's kind of hard to really, once again, outside of scalps long, which is probably the only play here right now, be looking to, like I said, get long in the mid to high 60s. These 67s definitely worth a shot. But you got to know where your outs are. You got to know when sellers are on the tape, and they have passively been reoffering week after week in certain spots. So head on a swivel. I'm not necessarily bullish CL, but I think there is an opportunity here to get long. Once again, I thought we were finally going to break this trend of, just downside activity and maybe finally get back above into the high 70s, but nope, sellers on the tape very early last week to kind of send us back down. So head on a swivel with Crude, as always, with everything going on in the Middle East and all the other geopolitical things and into election season, and people can say and do everything. Just be careful. Sometimes this thing is fun to trade. Sometimes you just get walloped out of nowhere. So be careful out there. So actually, I guess it's a pretty quiet open. I had the wrong chart up. Yeah, a little bullish open, I guess. We had a pretty little wick there below the previous day low. Interesting. But now we're kind of back at, I guess, above settlement from last week and potentially going to make a new high on the Globex open here. We've been open for about 20 minutes, but nothing too crazy. If you caught a trade, good for you. There probably was a trade there, given that kind of low off the wick there. But let's jump over to the very, 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 very light earnings week. There's nobody on here that is going to move the markets. The only thing that's probably interesting to pay attention to is going to be Nike, but we're in the very end of earnings season. The banks are going to be back on rotation here in the coming weeks, so we will have more to talk about. But until then, unless you're, there's nothing here that really, jumps out at me on anything that's going to possibly do anything for the markets. But definitely Nike would be the only one to pay attention to. They talk about consumer spending and things like that all the time. So you'll get a good heat check on, what is kind of the average consumer doing and how is Nike doing, especially when they announced the new CEO. I can't remember off the top of my head now. But yeah, Pretty light earnings week, so nothing really to talk about here. On the data and news front, we have once again the World Tour is back. If you hated it last week, you're going to hate it even more this week. The World Tour of Fed speakers. The big thing to always be aware of is some of these are not even necessarily non-events, but like completely irrelevant, because last week they were all talking, but some of them were at like, a Children's Economic Forum speech at a, museum of science kind of thing, where they're not giving any sort of remarks on policy. They're just giving like an opening speech or, the closing remarks at charity events and things like that. It's not a prepared speech that has anything to do with, the Fed's monetary policy or the dot plot or what their plans are. It's very much a much broader economic scope of things that they're just kind of including in their speech. When they're on CNBC talking about a number of other things, like sure. Or when they're doing a specific, interview or, round table and it's more open questions, that's when you can get the volatility. But last week you kind of had a mixed bag. So some of them we were, I think, kind of waiting to see what they might say during them. But you really didn't get anything that was too market moving at times, where it may change this week. We don't know. So with, Bowman and even Powell talking tomorrow, I don't exactly know what the full scope of Powell's speech is. And I know there are a few others, like I said, that are talking at charity events, are talking at a few other type of things this week. So if you're banking on, our favorite talking feds for some volatility this week, it may just depend on who's actually giving a relevant conversation type talk versus, a predefined remarks speech type thing. So there's a bunch, like I said, this week. We do have Powell, but, I think regardless of how important it is, the market still will hang on his every words. The algos just love to grab things from his speeches and his talks and do things and make us go all haywire over it. So you have a bunch of those. We have some bond auctions this week. We have PMI right after the bell tomorrow. So something to be aware of if you're trading the opens, that 15 minutes later, we will get PMI. So you will get most likely stopped out of a position potentially if you're not well in profit. So just, head on a swivel, know where your stops are early tomorrow morning after the open. If you are going to trade it into PMI, just be aware you're going to get that classic Dom seizure that we all know and love 15 minutes after the bell. And then we have talked about this, but obviously the market has kind of moved on from inflation being the favorite flavor of the week of things that matter, now on to employment data. So we do have JOLTS. You have non-farm payrolls this week. We actually have JOLTS quits too. Let's see. The usual bill auctions, bond auctions, crude inventories, D's favorite data release. You have more PMI. You've got ISM PMI and services, factory orders. So a pretty typical week of all the other, jobless claims, all the usual things that we have in a given week. It's kind of that usual gaggle of random news drops that are going to move the market, going to stop you out if you're trading in the 7:30 time frame. But you have the unemployment rate, you have non-farm, which is probably the bigger one of this week, obviously, to be paying attention to. You do have a 4-week bill auction, you have an 8-week bill auction on Wednesday. And then, just more Fed speech. So a pretty loaded week as far as things that can and probably will move the market. We have the usual employment data, got a bunch of Fed speakers. So plenty of things that should hopefully give us some tradable opportunities here in the short term of this week, but nothing we can't handle, right, team? This is, I think, if you've been tuning in and you're actively trading with us lately, these are, I guess, things that we've just we've become very immune to at times. I think it's for someone like me, I don't trade them. I try to avoid having positions open during any of these news releases or during certain Fed member speeches. So I try to be flat during any of these. If you're newer, there are a lot of these that drop in the pre-market around 7:30 Central Time that can and usually do move the market. On NQ, it can be 100 plus points. On ES, it can be 20 points within a blink of an eye. So just be aware. If you are new to trading, if you're new to Topstep, if you're new to trading futures, these releases are very important. I just think as you get more experience, as you get more comfortable, you just learn not to trade them. So you more are just watching with some popcorn, but be aware that these things can and will stop you out. And the market is super illiquid at times during these releases. So just be prepared. The auto liquidator should not be your stop loss if you're trading news. It most likely still will be because you can get skipped over. So the logic is just don't trade news, guys. If you don't know what you're doing, if you're new to this, you should have no business trading in an illiquid market. Wait for the opens. All right. Next, we will talk a little bit about where the longer time frame options data as far as gamma exposure closed on Friday. So we had talked about the big elephant in the room strike being 5750 SPX last week. Well, we've continued to kind of, hold below it, I guess. I think this is where you have a little bit of institutional wedging of, price or trying to keep us below it. Some people love to use the JP Morgan collar trade BS and all the other fun stuff. But the logic is there's a large amount of liquidity or an option wall, whatever you would like to call this, but gamma exposure at 5750 to the call side and to the put side. You have a ton of gamma exposure up there. So what that means, if you have never seen me talk about, GEX, gamma, or options data on TopstepTV before, the logic is when you see these large pools of liquidity like this, the options data, they just will act as magnets and they will act as support and they will act as resistance. So it takes a lot of volume, a lot of, institutional type buying to really move above these unless these strikes continue to move up. Like if this move rolls in the early parts of this week and we see 5,800 become the highest one, then yeah, we'll clear this with ease. But until you see one of these other strikes higher, potentially being kind of the most interested flavor of the week as far as, options positioning, it's going to take a lot of effort intraday, if this is still the biggest strike, to get over it. So where we're trading right now on SPX, I think where we closed on Friday, 57.38. I don't know what the spread is off the top of my head, probably near the settlement price, maybe a little bit higher than that, but it's going to take, like I said, a large volume of buyers to kind of push us above it. And if you're looking for a potential trade, this is where you may have seen me lean into these type of strikes or this large of a, options wall at times to act as resistance. I think there was one a few weeks ago where I jumped into a short, leaning into, one of these levels that it wasn't going to break. And if it did, I knew within a few points I was going to get out. I just didn't want, that's how you can kind of use them. And that's how I've used them in the past. And I think it's a good strategy that does work until options no longer rule the market on the 0 DTEs. So if the data is available, take advantage of it. You can use them. Like I said, you could look and lean potentially into 5750 as a short opportunity. And I'm talking SPX. This is not ES. So you figure out what the spread is. And then as it changes throughout the day or the week, you should have an idea. But at least going into Friday's close, that was still the wall. And I grain of salt this, guys, because this can change on a dime on Monday. As you know, it is the end of the month. This may act as resistance tomorrow, but Tuesday, this entire chain could look completely different going into, a new month being October. So there may be one and done type trades if this, positioning changes into the new month. So just be aware. This is Friday's close. I am not saying that is the trade that I would take, because I very much look at this data in as real of time as I can before making that decision. But on Friday at the close, 5750 SPX was still going to be a wall. For the time being, we'll see what it looks like tomorrow morning or 15 minutes after the open when options data pulls in. And we can get a good perspective during fast markets on how this is looking into the end of the month, as well as what it's going to shape going into maybe Wednesday as, new positions are established on the 1st of October. Hope that is helpful. Let's jump back to ES. Let's see what's going on. We're still trading near the highs of the Globex Open. Actually seeing a decent amount of volume. Let's see. But yeah, guys, that's my, I guess, knee-jerk prep here, given the balanced week that we've had and given us trading at all-time highs. Could be an eventful week, could be very boring, but let's get to some questions. If I've missed questions or you have some, please throw them in the chat. I think Andrew has grabbed a few, but please, please, please continue to, toss them out and we will get to them because we've got some time here and I want to make sure anybody that actually has a real question can get his or hers answered. But let's just jump in. Talk about the VIX this week. Well, there's no need to talk about the VIX because the VIX is dead. It's probably going to zero. Kidding. Guys, it's October, about to be October. So the seasonality would say the VIX should be a little bid, but the easiest trade, it seems like, of the last 10 months has been to sell volatility and sell it anytime it perks its head above, 18s, 19s, and even like the 7 minutes, I think on August 12th that it was, maybe not August 12th, whatever it was, like August 2nd, 3rd, whatever the Bank of Japan fiasco was, when it kind of like ticked above like 60 for about 6 seconds and then got sold into oblivion ever since. So it is still something to pay attention to, guys. If you do get any sort of weakness, I would expect to see VIX pick up. I would expect it to be back over 20, but until it is, the range is going to be compressed. We're probably going to continue to, one time frame higher on the weekly, continue to drift to make new all-time highs until there's any sort of meaningful sell here. The VIX is dead to me because it is taking volatility with it, and it's just less fun to trade. That's the truth. So if the VIX is over 20, it gives us some fun days and some good bi-directional rotations that, you can scalp long and short both ways, even in a violent move to the downside 2%. When the VIX is high, you get some rebids for 15, 20 points on ES, and then it sells back down. So you get some very nice moves when the VIX is high. So hopefully seasonality rears its ugly head and we get a bid in the VIX and everybody can make a ton of money, because that's the easiest time if you are day trading to make money, is when the VIX is high, volatility. And this just historically is a more volatile time of the year. October is historically when I have had my best months trading and, my best months trading at Topstep too. So I am fingers crossed that we actively get that type of volatility and those type of moves, because it is a lot of fun to trade. We'll see. Nick, thoughts on the likelihood of an end-of-day rally tomorrow, given the last day of the month? I think I kind of briefly said it. I wouldn't say end of day rally outside of, you guys have seen it, between options and passive flows. I mean, yeah, anything can happen. It's very possible. I have no interest. If you want to take a stab long for that type of telegraphed move into the end of the month with some micros or in a practice account, go for it. I'm not betting on it just because you just never know what happens. And, as much as we do see it happen at the end of the months, at the end of the quarters, on the start of new months, I just don't want to be caught with my pants down the one time it doesn't go that way. So use stops, be careful, know your outs if you get a violent move to the upside. But yeah, the probability is above 50%, I would say, given that all of our 401ks are potentially about to buy the all-time high. And I think that's just the cherry on the top if we get any sort of downside momentum into the seasonality part of October and you get any sort of correction into, the election season. It's almost like the chef's kiss that all of our 401ks would buy the all-time high right before, any sort of correction, even if it's 5-10% down in the next week or two, that we happen to buy the all-time high. So it's just very poetic when you think about it. Nick, do you have an easy way to project weekly expected move on NQ or ES? I don't. I know a lot of traders that I, am friends with and trade with. I know a lot of people like to use ATR and use data. You can use Edgeful. You can use, there's indicators in TradingView. There's probably an indicator of ATR that's calculated some way on different trading platforms. I don't think there's one in TopstepX, but you can get that data, I think, a lot of different ways. You can Google it. There's probably even sources that would give you the average weekly range given, the last few weeks. So you could project that on ES and kind of give yourself, a rough high and low expectancy for the week. But yeah, that's probably the most simple way to do it. Some platforms just spit it out, but it really depends on your model. I think the Edgeful team has a good way of projecting it. There's a few others that you can use. Part of it depends on, what volatility is and the average true range and some of the moving averages. I mean, you can get down a crazy rabbit hole with some of that stuff, but there's probably a free way for you to get that data. So do a Google search, ask around, check your platform. Like I said, there's probably a ton of free trading view indicators of people that have different calculations, but I would once again if it is free on TradingView, I'm assuming there's a bunch, but look a little deeper into the code and see how they're calculating it, because it could be garbage is what I would tell you if you're trying to lean into that being a high or low for the week. You could even manually calculate it yourself, looking at the last few weeks of ranges on ES, and then just, looking at the last, let's say, rolling 2 months. What's the range on ES? Okay. Divided by 4. Divide the last 2 months, divided by 8, and then get a rough range of at least what we've been trading at in the most recent time frame too. So that's an easy, simple way to do it too. But if you want hard data, there are sources that can really get you a true range and have it be adjusted given probably even daily moves and things like that too. Just depends. Nick, do you back adjust all your charts? Yes, I do for futures. So when I roll, I do back adjust them too. I don't like gaps, so that's why I do it. There's volume traded there, and the rollover makes things weird on some of my indicators and some of my volume profiles. So I like to back adjust personally, but it's really your preference. Nick, can you show us your volume profile setup? Yep. Happy to. So I use ticks, and you can define your ticks per row yourself. So I just like to have, it be pretty much just colors and giving me ideas of where the high volume edges are, the low volume nodes, and then we can kind of adjust it from there. But if you wanted to go, each one of those bars is an ES point. You could just set it to 4 ticks, 1 point. On NQ, I would probably use at least 4, maybe even 12. It really depends. I mean, you can make it look however you want, but the logic is each one of those bars on NQ tends to move in like 20 to 30 point ranges at a time. So it sometimes makes more sense to have it be on a few point per bar, but it's really personal preference. And then I keep my value areas at 70 inside of Topstep X, but you can also just turn them off or have them all be one color, because then it really doesn't matter, because then you could become, looking at volume profile the way I do, which is, where the specific value area high, value area low is a little less relevant, because I tend to use, certain spots on a longer time frame, like what you see on the right, like the low volume edges, these other kind of higher volume nodes to guide my decision making, versus just using a color coded value area high. But it's really your kind of choice. Well, that's all the questions that are in my chat window here. I don't know if anyone else has anything they want me to cover. If not, we'll do a quick recap of the ES plan for anybody who joined late and didn't catch that, because I always like to kind of review once again, make sure it's driven home a little bit. That's what happened. But yeah, if you have any other questions, I'm going to jump through ES one more time, and then we can wrap it up and give everybody a chance to go back to football and their Sunday. And the Bears won, by the way. How shocking is that? Like the first round draft pick discussions are probably gone again, because now they're back to 500. But anyway, it's my little dig on all the Chicago guys. Sorry. So as we were discussing earlier, looking at ES from last week, pretty balanced distribution. I'd be looking for potentially a solid rebid off of 5760, 5770, where you might find passive buyers. And I guess that was 80. But you kind of already seeing that passive rebid off that general high volume node from last week, that point of control from last week already in the Globex session. So hence why I'm looking to put my pivot for the week a little bit lower, probably around the 60s, to be honest. Like 5760 is probably where I'd be looking for a passive rebid to potentially come in. So naturally that may act as my pivot for the week. If you were to lose that, probably getting your rotation back down towards the 40s to 20 area, where, definitely could find buyers there. But if I'm short off, that 60s, 50s area, I may be looking for that full rotation down to 57.10, 57.12, 57.15s even. And then if you were to get that full traverse of value down towards 5,700. And the bullish case, let's rebid off that area, 57.70s, and go make a new all-time high. And I think we all love that. So we'll see what happens, but that's kind of the logic is if you rebid off that pivot for the week, that low volume node from last week, we go hit an air horn and, you know, let's keep the party going. Oh, a couple more questions came in. Nick, do you use Elliott Wave for any of your analysis? I'm not laughing at you or the question. I'm just laughing because that's just a longer term, you know, joke of some of my trading friends. But hey, man, if it works for you, by all means, use Elliott Waves, use moon phases. I've seen people make money in a million different ways. I don't. I have no understanding, no knowledge whatsoever. I'm a Motive Wave guy, and I think they actually sell an Elliott Wave edition. I have never played around with it. I don't necessarily believe in it personally. I think even the principles of it are probably based on, you know, other theories in price action and in the auction theory and other things that I use. So there probably is some validity to it, but I don't believe, and I think the market loves to make a liar out of people that believe it truly trades in those type of waves. So it doesn't work for me, but if it works for you and you found a good strategy that, you know, you found to be profitable with it, by all means, man, I'm never going to fault somebody for doing something that works for them. I think everybody should define their style that way too. Find things you like about my style or the way I trade, and find things you like about like Dakota or Rips or whoever, and take the best, leave what doesn't really necessarily work for you, and kind of incorporate your own kind of, you know, trading logic, trading style that you can execute on and be profitable with. You don't have to listen to me. You don't have to listen to, you know, any one person. My knowledge has probably come from about 10 or 15 different, you know, trading buddies and mentors and people that I've met, and they all trade very differently. So that's what I did. I took the best from some of them that I liked and that resonated with me and that made sense to me, even the way they described it or the way they taught it. And then I tried to incorporate that in my trading. Nick, what helps you make a decision to pull the trigger on the trade? A lot of what we've been talking about on the show, but it happens to be when those things tend to come together in, you know, correlation. So I see passive buyers on the tape on time and sales, and they happen to be stepping in around, you know, a low volume node. And that low volume node also happens to be like the overnight low or something. And you had an excess stop run kind of right below it. When you see like all of those things happening, it's almost like, you know, whatever you would want to call it. It's just like, how about this? It's green check boxes for me to enter a trade. And that's a little passive joke there, but it is green check boxes to give me confidence to enter in the trade, because we're validating things that I look for to happen for me to, you know, be confident or feel like my trade thesis may be correct. Or if anything, it's like when all of those boxes get checked, it almost turns the odds against the casino kind of thing. I think it turns into a higher probability setup versus me just entering in no man's land. So when I see all of those things kind of firing at the same time in a general area, it gives me good confidence to know, like if you guys saw, I think on Thursday, I was on Fast Markets with Anne Marie. It gave me confidence to hold a trade with like a 10-point stop on NQ because I saw something, I saw sellers step on the tape, and, you know, it just was like, this makes a lot of sense that this move may happen. And I know if it stops me out, it was definitely wrong, because it shouldn't, in theory, it shouldn't stop me out because all these other things are checking the box for me. Where do you pull weekly profiles from? Market open Sunday to Friday close? Yes, that is how I draw all these. So TopstepX does not have the one that you can predefine kind of the weekly range yet. But you can just draw, like I said, from Friday's close to the Sunday Globex open, or basically just, yeah, I guess that's exactly what it is, for how I'm drawing these weekly charts. And we've been doing this basically every week since we've been doing Market Kickoff. So if you've been following along with me, it's actually a good strategy to kind of use. And as you get more of these on the longer time frame too, it's where you could start drawing even, you know, boxes of balance ranges, which is a concept I think I've started to talk about with you guys. We had talked about it when we had this like 2+ week consolidation right here. But that's what you could do in theory is, let's just use as an example if I can find one. It's like if you start to draw these week by week, you can have an understanding of, a longer time frame value area is something, whatever. It'd be like that. Like I'm just grabbing, that's probably not a great example. There's not a good setup here for this, to be honest, but you could see what I'm talking about. So this old balance range that we were trading at here, you could basically start to find all of the value areas from these volume profiles that you've been drawing week after week. And then on a longer time frame, the market tends to consolidate, let's say, and you could do the classic Nick Dolby range trade potentially if price were to re-enter that box that you have now drawn. So that's one way you can use, weekly volume profiles on a longer time frame too. Yes, Jay, get those check boxes in the chat. All right. So we're coming in on an hour here. That's usually what I like to keep this at, because anything more than that with market prep sometimes is noise. Guys, there's a lot more we can always talk about, but I like to always leave it in your hands. If there's other questions, if there's other things you guys want me to continue to evolve or talk about on this weekly series, please let me know. Send me a DM, send me a message on Discord, whatever it may be. Let me know in the chat. But over time, as always, I want to continue to get feedback from you guys, evolve this. What more do you want to see? What do you want less of? Are there concepts you want me to dive deeper on? Do you really want to get in the weeds on ES prep and really figure out how I define levels on a longer time frame and things like that? All things we can eventually discuss and talk about. But the logic is, I hope you guys are feeling a little more confident going into the week. I think there's a lot that can happen this week with the indices, with GC. Who knows what's going to happen with Crude? That's why I don't love to trade it these days. But yeah, guys, thank you for tuning in. I will hold it one more, I guess, for another minute or so to see if there's any other questions. If not, I hope everybody gets to enjoy the rest of their Sunday. I hope you're enjoying some fall weather. It's starting to finally cool down here in North Texas. So I am going to enjoy cooking dinner here shortly and relaxing. But thank you guys for tuning in. I hope everyone has a wonderful rest of your night. I will see you tomorrow morning on Fast Markets with Coach Dakota. If you cannot get enough of TopstepTV, tune in with Coach DBA himself here in about 90 minutes, maybe a little more than that. Hour 45. If you want to see somebody take some Globex trades, there's your man. But he will be live for slow markets here in the next 2 hours. So go get some food, take a break, watch the end of the afternoon football games, and we will see you back for Coach DBA. But if not, I will see you guys tomorrow morning, and have a wonderful evening. And thank you again.